Good morning. Welcome to the May 2021 Revenue Estimating Conference, our final meeting, and we will do our revenue estimates today. We have all the principals in person here today, and we have our worksheets available on the General Assembly's website, the page dedicated to the Revenue and Caseload Estimating Conference, for those who would like to follow along. As usual, we will go through the estimates from each group and discuss, and sometimes there are long pauses as we come to consensus. So for anyone watching, that is typical. If everybody's good, we will begin with personal income tax components and FY 2021. First one is estimated. 2021 enacted, $259.3 million. Budget, $292. Senate, $272.5, and House, $287.98. And I think for all of us, it might be helpful if we could ensure we have the same accrual adjustments and other things as we work through this. So I'll start. I used spreads and then added back the almost 30 million accrual on this one.
I'm obviously quite low. I thought I used year-over-year growth, and I actually thought I was going to be a little bit higher. I do get spreads that are coming in up in the high 270s.
Do you add back that almost $30 million accrual after you estimate?
Yep. Yeah, 28.98.
Yeah, that's why I have a weird number.
Yeah, we did the same thing. We used spreads and added back the $28 million of July cash.
I mean, I can certainly get in the range of where Sharon is, the 288 pretty easily. If you look at what the quarterly payments averaged, just over 50. If you assume another 50, pretty much puts you there. I saw April's as a bit lower, so I was a little more cautious that people were making adjustments, but if you add March to April, you get back up to 50 again. So.
$287, $288.
Sounds good.
I'll round to 288, which, one of my,
Yeah, sure.
okay, finals, final 2020 number 182.3, enacted 425, budget 455.1, Senate 415.9, House 467.8. And here's where it's possible I've double counted a pass-through accrual, so I want to just kind of see how people did this. I think this, and particularly 22, I seem to be a little higher here.
So yeah, Mouse, this is the hard one, I think, of all of them. So in terms of adjustments, obviously you have the extra July cash, which is 150. We are carrying the PPP deduction impact in final payments. I think the email from Paul, which I have as negative 28.94. There are, a bunch of, so there's, older TCJA stuff, which we're still carrying, which sums up to 10. I have 10.35. There's a slew of recent federal changes from the testimony, which I have as a total of negative 13.22.
Okay, maybe we should, negative 13.
I mean, the two big ones, so that includes both the recent ones and the ones from the CARES Act.
Oh.
So that's not just the most recent federal bills.
Okay, for what it's worth, I put all the EITC in the refunds, which is where we've carried every other EITC adjustment. And I probably should have mentioned that. I didn't think of it till this weekend when I was doing it. Isn't that where it would show up?
Yeah, I guess presumably, yeah.
And for me, that was almost all of it, right?
Right.
So that might explain some difference.
I guess, are you carrying the child tax credit too, also in refunds? That's the other big recent one, right?
Seems like I am, because I didn't put any of the only change, I didn't put any of the ARP stuff in finals because it all looked like refunds.
Okay. Yeah, I guess that makes sense. And then for the older adjustments, I think the biggest one was the temporary waiver required minimum distributions, which is negative 6.
Yeah, I had a total of 7.4 from that, unchanged from the prior year.
Yep.
From the prior conference.
And then in terms of the pass-through piece, so we're basically carrying, not to get into the accrual worksheet already, but I guess this is part of these numbers currently, right? So we assumed, I think, 101 of total pass-through, entity payments. That was basically spread off of last year. And then we took the payable from Peter, which is the -30. So that adds 71 on net to our number. So, I mean, I guess kind of thinking about, I guess, a base here, if that's even possible. I guess our base is kind of in like I think it's like 333, which we thought was, and that includes the pass-through piece. So that includes the pass-through piece, but not, I guess, sorry, that includes, I think, everything except the extra cash in the name of the PPP deduction. Now I'm confusing myself, but basically we're trying to get to kind of a similar cash base, I think, as last year when you add back in the 150 to last year, which ends up in the 332. So we tried to get, I think, to a similar, given that the actual data here is hard to interpret with the delayed filing deadline, we kind of try to get to a similar base as that, and then put on the PPP piece on top of that, and then add in the extra July cash.
So can you confirm, so you've got a net 70 on PETs?
Yes.
'Cause I think this is where I didn't deduct the accrual double count, because I have 90, and I think that's why my stuff is a little bit high, because I didn't take that down. So it makes sense to put in the net number here?
Yeah, I think we ended up last time adding the net number back into finals, right? That's where it shows up.
I did not leave a good enough trail of breadcrumbs on that one, so
Yeah. 'Cause it's in a separate line in the accrual worksheet, which is
Yep.
confusing, but I
Yes.
think we have to account for it somewhere within these estimates, right? So I think
Right,
we added
that's
the
why my
net.
stuff doesn't match my accrual sheet.
Yeah,
I
so-
figured that was it, but I would adjust mine downward based on that. I had only estimated the 90 we've gotten, but I don't know what Steve's got, but if it makes sense to kind of pick a number there to work off of, I'd be fine with the 100,
Yeah,
101.
I think not much came in May and June of last year, but there's a little bit. I mean, most of it comes in December as an estimated payment, right? But I think a little bit did trickle in May and June last time, so I just did a simple spreads on that from last time.
So you had additional payments in addition to the 30.1 that came on the sheet? The accrual sheet?
No, we had, so the cash in the door on the pass-through entity payments is 90-something.
90.7.
And then I just took a spread off of last year's pass-through entity payment, like month-to-month spread essentially, and there was a little bit that came in May and June. So that got me to a bit higher number when you add in that May and June,
I guess
essentially.
I don't understand what the 30.1 is. If the other things are all known, why aren't they?
The assumption that there's an overpayment that's going to get refunded, right?
Yeah, and I guess there could be more duplicate payments that come in May and June, which would, I guess, would increase that payable in theory. So, I mean, I guess we could take a ratio of the payable to the cash as it exists now, and then increase the payable potentially based on extra cash that comes in May and June. But it sounds like taxation did some work to figure out who had paid twice potentially. And that's what that $30 million is based off of.
Steve, are you saying you don't, that would explain maybe why your estimate's low, you don't have a more than 30 million as pass-through? Yeah, I think with 90 in, we need to,
Yeah, I mean, it's a lot of cash. I mean, it's such a big jump from last year. It's a little concerning to book all that cash, but it is cash in the door at some point, right? So it is going to be revenue minus some payable.
I guess erroneously, I thought that was accounted for in the A and C sheet because it was known, but if it's not, yeah, that explains why I'm quite low.
so the theory here is that when the IRS signed off on this, more people started to engage in this process, and that's why the number's expected to be higher than the last year, right?
Yeah, I think so. And I guess they had already made duplicate payments, not knowing that was going to be the case. And those are sitting in our cash numbers, presumably. Around $30 million. That's the estimate.
So this is why I think it would be helpful if we just agree what that pass-through entity number is, even if, we have different, it's going to be not helpful if we don't have a similar number, given how that adjusts on the accrual sheet. Then Steve, where did you put your our adjustments?
I didn't have any in finals. I had some PPP. I had some additional UI withholding, TCJA, and the Health Source Rhode Island payments, mandated payments. I had them coming out of finals.
Yeah, I think those are, well, I guess they're both refund offsets and their payments. I think they're mostly refund offsets, I think, right? So I guess they would presumably make refunds look less negative, generally.
I only accounted for them in finals. I didn't know where to put them, but.
So if I correct my PET to back out the 30 million, my number goes to 448.
What did you each have for total pass-through entity payments? I only had the 30.1 that was on the sheet, so I want to see what happens to my estimate if I adjust by your numbers.
So I originally had 90, but I adjusted it to the 100 minus 30 because I was overstating it. I didn't take out the 30. And so making that adjustment, I get 70.9, which I think is the same as.
Well, I think mine has an error that is not correctable on the fly here. So really more between you two.
I feel like if you take your EITC out, we're just about right there. Once I adjusted I conformed to your pass-through entity number.
Yeah, I think we're at 460.9. Moved. Does that make sense? Yeah, you were lower, which I wasn't sure.
Yeah, it's because I had to lower mine because I over counted that.
Sharon, what's your base number? Do you have, or is that a?
I do have a calculation.
Well,
for
I don't.
that.
I mean, I'm just trying to.
Well,
Because otherwise.
before PPP.
Uh-huh.
Okay, so that's. So 334 excluding CARES Act and PPP, but including the pass-through, which I think puts it on par with the 2020.
Sorry, that was 234 with what's in there again? Sorry, I missed that.
Let's see if I'm able to give the same answer. It's includes the pass-through, but does not include the impact of the PPP, that 29 million, or 7.4 I'm carrying on CARES Act.
And does it include the extra July cash?
No, I
Okay,
backed out the 150.4 because you wanted a base, right?
right, yeah. So it's with PPP, but not, okay.
No PP.
Oh, sorry, with the pass-through entity piece.
Yes,
Got it. Which is 70 now in your,
71, yeah.
yeah. And does that include TCJA?
Yeah, I would consider that the base.
Okay.
When I would say new things in 21, not in 20, are just the CARES Act and the PPP.
Okay.
And the underlying base I even started with attempted to use spreads. So not a growth rate per se, but
Yeah, I think our base, so with the pass-through piece, with TCJA, we're carrying a hit for qualified jobs in motion picture. Our base is 356. Which is, I mean, a bit strong compared to last year. I guess the hard part for us has been presumably the pass-through piece is eating into final payments. I mean, not to go too far back in history, but I mean, we've had this ping pong, right, between, so pre-TCJA, people paid estimated payments because they could deduct them from their taxes, right? Post-TCJA, that was capped, so there was a shift in final payments, which is why 2019 is so large compared to history. And then presumably there's been a shift back to estimated payments because of the pass-through entity workaround. However, we book those as final payments. So it's kind of, but I would assume that would eat into the base of final payments, the regular base of final payments from previous years. I don't know, it is difficult.
So what was your comparable base? Was it
356?
Well, I can adjust my base upward by roughly half the distance if I can figure out how to do that. Maybe we can arrive at a number we can live with. What did you say your base was without those things? 356?
Yeah, actually, I was just looking at that again. I think that's incorrect.
Maybe 345?
Yeah, I've actually at 347.
Okay.
I just figured that out, yeah. Yeah, sorry about that.
How about 455.6? I think I've got the bases roughly split. So that's your pass-through number.
That's fine.
455.6.
And that's the 101 flat pass-through number.
101 pass-through minus the 30.1
Yep.
for a net 70.9
Okay.
in that in that 455.6.
Okay.
So what is it before the pass-through entities? 384.7? 3.
Oh. Before the
Well, which
accrual or
number
the
would you put
pass-through?
on the accrual sheet? Which number would you put on the finals line that then, you know, pre-adding in the pass-throughs?
455.6 we adopted, right?
Yeah.
Minus 70.9.
So 384.7.
Equals 450 minus 7. So you said? Yep.
Or actually, do we take off the entire? No, it's the entire pass-through piece, actually. I think Paul's texting me to tell me I'm wrong. We take off the entire pass-through piece because that's a total separate calculation.
It's
right?
added.
Yeah. So it's really minus 101. So it's 354.6.
Yes, this is why my estimate was too high, because I did this wrong.
Oh, and Paul's saying yes. So we're good.
What? 3.
54? 101? Right?
So we adopted 455.6. I think the accrual worksheet, you have to take off the entire pass-through piece, the entire cash, because that's all done on the side.
And the net is added back in after. The 70.9 gets added in after. So on the accrual sheet, it's different than the sheet, the official estimate sheet.
Yeah, that's why it's confusing.
So the number you cited is the net finals number that goes on our main sheet, right?
The 354.6.
No, the three,
The
384.7.
Yeah.
3,470, yeah, yes. I think that's right.
Oh.
Well, so I think for the accrual worksheet purposes, we take off all of the cash, the 101. We put that into the box and let it do its magic, right? And then we put the 101 off to the side there and have it calculate. Then there's a separate line that's the pass-through entity piece, which should be 70.9, right? And then we add the 70.9 to the finals number to put it on the consensus sheet. 384.7, I think you're right about that. Paul says that's correct. Does that make sense? Because we account for the net cash in the consensus adopted estimate, but we have to take out all the cash for the worksheet, for the accrual worksheet to work, right?
Why isn't it the number plus 70? No, you're doing the number minus 70. Why isn't it the accrual worksheet plus 70? $425,500?
Yeah. Yep. Yeah, that's right.
We'll know at the end when the totals match.
Yeah. No, yeah. It's the number without the cash plus the 70. Yes.
Right.
Yes, that makes sense.
Did you follow that, Steve? So you
Yeah.
take the 354.6.
Yep. We want our net finals number to be 455.6, correct? That we're adopting on these?
No. 425.5. 455.6 is the starting point. Without the accrual, you back out the 101, and then you only add back in 70.9. So as not to double count the 30.
So the 455.6 is the total cash.
That's the starting point that we need to identify in order to back out the 101. But we only add back in this column H, 70.9, to the 354.6, which gets me to 425.5.
I guess I'm getting confused if we're talking the sheets, we're talking numbers that go into the accrual calculator or end adopted numbers on the conference worksheets.
Okay, so I'll tell you how I understand it, and then you guys can tell me if I'm wrong. So when we do our gross estimate, our individual gross estimates, we figure out what we think is happening, including the reduced pass-through entity number, the net, in this case 70. But then when we use the accrual, we actually increase that number to include the full amount, the 101. But then we only add back the 70.9. So 3 different numbers. We start with 455.6 on the accrual worksheet, and we end up with 425.5 on our conference estimate.
So I don't understand how you guys came down so much then. I mean, that was the number I had put on the sheet. I went through the accrual calculator and then put my net finals after the accrual changes on the sheet. But like budget's got 455 there. I assumed that was after going through the accrual calculator.
Yeah, that was adding back 70.
Right, so you'd be in the, before adding it back in the 384.7, I think, right?
Yeah, I mean, I might be doing something wrong. Maybe we just take a couple minutes to each work through it ourselves and see that we haven't talked ourselves into a circle.
Yeah, I mean, Paul is chatting me on Teams, so I do have a line into Paul. So I guess just to be clear what we did the first time. So not to interrupt your train of thought, Sharon, but our critical worksheet has 383.8 in the finals in D3. So that's the cash without any pass-through entity payments in there. So close to 384. I mean, that's what Steve said. So we had 383.8. I think Steve said 384. I mean, we had a bit more exact pass-through entity number, but basically 384. That was what we put into cell D3 in the accrual worksheet. So that's the finals without any pass-through payments in there at all. And I think that's how the sheet works. It's supposed to be everything except the pass-through piece, right? So I guess the question is, when we did 455, what is in the 455.6?
For me, it is the net pass-through 70.9 and everything else that I think we agreed to, right?
So to get a net 70.9, it's 101 for the pass-through entity payments, right? And then
Yeah.
the 30.1, which was the fixed number already in there, right? So to get to 455.6, it has to be 384.7 on cash. Right.
And that goes in the accrual worksheet.
Okay, so maybe that's the part I did wrong, right?
Yeah. So the 455 does not include the 101, includes the 70, right? Yeah.
So you take that, only the 70 out, is
Yeah.
what we're saying. All right,
Yeah.
so that's my bad.
Oh, Paul's saying no to the 384.7. I thought we figured it out, Paul. But I think the issue is what's in the 455, and we think it's just the net, right? And that's our decision. That is the net, right? That was our consensus. So
Based on 101.
1 minus the, yeah.
So we didn't really say cash. We
No, it's not
said net
cash. Yeah.
yeah, I think that's where we're confusing
Right.
people.
The
is that-
455 is not cash.
Right.
Yeah.
If we were estimating cash, we would add 30 million to
Yes.
that. I think we'd end up in the same place on starting point for D3.
That makes sense to me. And that includes obviously the 150. Obviously. Yeah. So that's really like a 234 base, but with the PPP in there. I'm just trying to make sure this makes sense from like a bottom line perspective, but I think it does. So it's like 263 without the PPP, which seems like a reasonable number. Yeah, that's not, I think that's not cash, the 455.6. That's the problem. Yeah.
The only other way to do it is to elevate the number with the extra 30 and then back it out. I think it's more confusing for us to do that. I just backed out too much this time. So just to be clear, on our sheet, FY 2021 finals estimate reads as 455.6. And of course, it's not any, even though it's very close to your number, it's a different composition, a different composition on my number. But there we go, 455.6. Moving on to refunds, which will also be fun. Audited refunds, 358.2, enacted budget assumed 410, budget 410, Senate 416.9, House 386.1. And now you also know that I have my EITC out of this, which would mean I'm probably even lower than you guys.
Yeah, I think we're at, does that add 5 million to?
Something like that, yeah.
So we'd be at 415.8.
So I could not see where that money was going to end up out the door this year. I'm certainly open to persuasion, but unless I've missed a step in this calculation.
Yeah, I mean, it's obviously hard to use spreads or anything given the payment shift, right? Yeah, I mean, we stuck with enacted, and then I guess obviously you add the recent federal changes. I mean, I think our assumption is mostly a timing shift. I mean, the average payment per refund looked pretty similar to previous years to us, so I'm not sure there's actually a change in the amount of refund per refund. I guess the question is, like, is there a change in how many refunds are going to get paid out?
I don't know how Matt convinced me is there's a taxation testimony slide about, it just shows the shape, and it really looks like it's the same shape, just moved over 3 months. So, or not 3 months, but a month. And so it just really looks like almost exactly the same. Without anything better, that's what we assumed.
Yeah, I just, if we exclude this prior year refunds, we're looking at a 390 base as our current estimate, right? Which is still higher than anything we've ever seen. And if you look at last couple of months payments after April deadline, whether it's the official filing deadline or not, I mean, you rarely have that much more go out the door those last couple months. That's the thing I couldn't reconcile. I mean, we have 287? If you net out the 19?
Well, that's cash. Yeah, I can check that, but
Like another 100 million in 2 months?
I mean, there should be some timing shift given the delay in the filing date, right? I mean, I get the refunds don't all come at the end. Typically, they're more steady through the year, but it does seem like, yeah, to Jonathan's point, given that chart, in terms of we're lagging so much behind the trend, like we should catch up to some degree, right, in terms of number of refunds paid out, unless we think there's just a structural change this year in how many refunds are actually going to get paid.
So, to that end, I also looked at the monthly UI withholding versus not, and there's probably about $30 million of withholding that didn't happen, and to me that eats into refunds. So, I tried to find some reasonable middle ground there. Does it make sense that we're going to pay fewer refunds from our estimate? Just 100 million seems more off than usual.
The last piece of this is, there is, not to get back into the accrual world already, but So there was that, excess business loss provision that was accounted for in the accrual. But there should be presumably a cash impact to that too, right? Accruals just shift things. They don't actually book impacts. So I mean, that estimate assumes there's extra refunds that go out for this excess loss provision that was changed in the CARES Act, right? So that was another, admittedly anecdotal, but another reason that we didn't want to bring down refunds too much. Then finally, I mean, we had, pretty strong numbers for estimateds and finals, so refunds was a way to also hedge against those, pretty strong numbers that we're adopting for the current year. If some of that money goes back to people as refunds, that to us seemed reasonable. But yeah, I take your point, there's not a lot of time left, but there's clearly been a shift in timing. The question is, is it a pure shift, or is it there actually going to be less refunds this year for some reason? And it's hard to know given the actual data that's out there right now.
There'll still be more refunds, right? More money goes out the door than prior years. I'm not suggesting there isn't. I'm just saying it's not as much as we initially estimated.
Sharon, how much of the UI did you assume?
Well, I simply identified that there's probably 30 million or so in withholdings that didn't occur. And as I was trying to assess whether the spreads made any sense, that kind of factored into that.
Yeah, my trouble, I also thought there was about 30 million. My trouble was, like, what's normal in terms of UI withholding that doesn't occur in a normal year? Presumably there's some, right? This wasn't all just the bonus payments, or
Yeah, it's just it's like
but it's certainly
four
bigger.
times the normal volume,
Right.
plus more money per person than ever before.
Yeah,
That's
right. Yeah, it's certainly a larger number, but I had assumed more of that on my very screwed up finals sheet, so I could move it over here and maybe salvage something. if I assume some UI impact over here, I mean, I can easily get in the 400-ish range. Now, how did you guys account for under withholding on UI in any component, Matt, or not directly, or?
Yeah, not with an actual adjustment explicitly. We definitely did think about it as something that might impact refunds.
$405.
That's fine.
Yeah, that'll work.
Okay, refunds, 405 million. Okay, withholding, the largest number and the one on which we are the closest. 2020 audited 1,263.4, enacted 1,281.8, budget 1,313.9, Senate 1,315.5, House 1,313. I can do budget's number.
$13.13.9. Yep.
Okay, get out your accrual calculator. Let's see if we can get this one right. So my entries for this are 288, 384.7, minus 405, 1313.9, and I get 112.5 as a negative 112.5 as the accrual.
That's what I get as well.
Yep, same here. And we have 101 as the past revenue payment piece, and then net 70.9.
Which gets us to a grand total of 1540.
Mm-hmm.
1,540,000,000 even. Steve, do you get that?
Yeah.
Okay, now you have to rebase. See you in an hour. Yeah, well, just let me know when you're ready with your rebase numbers. Okay, if everybody's ready with their rebased personal income tax numbers, we can start with estimated. Our newly adopted estimated for 2021 is 288. And November 2022 was 232.2. Budget is
256.4. I'm sorry, 257.4.
257.4. Senate.
254.4.
254.4. And the House is that right? Sorry, I wrote the wrong one. Oh, no, it's the same, 268.2. Yeah, so obviously I have a little higher growth rate than everybody. Mine uses dividends, interest, and rent, I think, but not all of it.
Yeah, I mean, I had a negative, I used PI growth, which was negative 1.8. And you backed out the 29.
Yeah, that's not, I do that after, the 30 is after. So base to base, I went 258 to 268.
Yeah, and we kept the same enacted growth, which is negative 10.5. Obviously, that's after the backing out the 29. So really, the base growth is like essentially flat. I think we have like a little under a percent. Yeah, I mean, we definitely saw there's a lot of indicators in terms of stock market, other things that are pretty bullish for next year. I guess we just worried about being in the 260s for a couple years in a row, given that we generally don't get there. And there's probably some shift between this piece and the pass-through entity payment piece too. So we also didn't want to try to overbook money in 22 for this.
I can do flat growth at 258, if that works for anybody. Zero growth, I should say.